April 2nd is shaping up to be one of the biggest financial headlines in 2025. President Trump's tariff deadline is here, and whether tariffs continue or not, it could shake up the stock market, it could change prices at the grocery store, and it could definitely impact your investment strategy. In this video, we're breaking down what tariffs are, why President Trump is bringing them back, how tariffs affect companies, consumers, and stocks, and most importantly, what you should be doing whether the market drops or pops. This is your full, no-fluff guide to one of the most important financial events of the year. Now, what are tariffs really? Let's break this down in a simple manner. A tariff is a tax placed by the government on goods that are imported by other countries. The idea of this is to go ahead and make those goods more expensive, therefore incentivizing or encouraging people and businesses to go ahead and buy domestically because it's cheaper. So to give you an example of this, think of it, the US added a 25% tax on cars from Germany and Japan. Well, in return, you would see companies like GM, Ford, and Tesla have a price advantage because of the fact that those other cars are imported goods into America. Therefore, you will look at the prices and say, I'm really incentivized here to go ahead and buy the cheaper car because these cars have gone up $3,000, $4,000 to even $12,000 per vehicle. But please do not get it confused. Tariffs do not only affect countries. They can affect supply chains, prices, and most importantly, they can affect us. Now, the question that many people have, why is Trump reinstating the tariffs? In recent weeks, Trump has been very vocal. He's calling April 2nd Liberation Day, and he's saying that we need to take a stand against our foreign adversaries, China and Russia. Now, in his words, he's saying that America needs reciprocal trade. If our goods that are being imported from our country into other countries are being taxed, well, basically, he's saying that we should be taxing those goods that are being imported from other countries into our country the same. You have to understand, Trump has been blaming past administrations of being weak. And he's saying that his purpose of doing tariffs are to protect American job markets as well as manufacturing. Trump even has a recent quote saying he's going to make sure our workers aren't being undercut by cheap imports. Now, all of this sounds well, and I'm sure he means well, but behind this patriotism, there will be a huge economic shift. Not everyone agrees that this will be great for the markets. Now, how do tariffs actually affect companies? Let's talk business. Tariffs directly affect U.S. companies, especially those that rely on large imports as well as global supply chains. Let's talk the automotive industry. Ford and GM rely on foreign parts. Tariffs equal more expensive parts. More expensive parts equal less margin, aka less profit. When it comes to foreign automakers, well, they're going to get hit as well. Some foreign automakers can pay up to $4,700 in extra costs just for their vehicles to get imported into the United States, according to AP News. Let's talk the tech and semiconductor industry. Apple, Nvidia, and several other companies rely on Chinese manufacturing. Higher tariffs equals more expensive devices. More expensive devices equals less margin, aka less profit. And lastly, I'll mention the retailers. Amazon, Walmart, Target, they are humongous importers. If they don't raise prices, then they take a hit, aka less margin, aka less profit. So as you can see, these are three of several industries that are impacted directly by tariffs. You never thought about that, did you? Now, how do tariffs affect you and I, aka the consumers? Now let's bring it to the everyday level. If tariffs do return, you will feel it immediately. Cars, electronics, appliances, clothing, these things could all go up in price. Even groceries could see a significant impact due to higher importing costs and the possibility of other countries doing retaliatory tariffs on us. Some imported products may not even be on shelves anymore, just because of the fact that they're not profitable to sell. These are realistic impacts that happen by effects on tariffs. You have to understand, if goods remain expensive, inflation stays elevated. And if inflation stays elevated, then the Fed stays cautious. And if the Fed stays cautious, then the market is negatively impacted. Remember, the market, and I say it all the time, is an emotional place. Negative news in the short term always makes the market volatile. Positive news makes it goes up. Negative news makes it go down. Now, what we're all wondering, what does this actually mean for the stock market? Markets don't like uncertainty, and trust me, tariffs bring plenty of that. In the short term, I would expect fear. And fear means volatility in the stock market, so you can expect people to sell off their high risk assets. This means that they'll probably sell off in tech, they'll probably sell off in retail, and in the industrial companies. Some traders may even try to short Chinese stocks just because they will be significantly impacted by tariffs. Now, long term, some U.S. businesses may actually benefit from this, such as domestic manufacturing. Some businesses may fail completely just because they lose their competitive edge. We're talking about companies that rely heavily on global shipping as well as imported goods from other countries. Please understand, if inflation spikes, then the Fed may pause rate cuts. And trust me, that impacts everything. Even great ETFs like BTI and SPY are going to feel the impact of this. They hold all of these major companies, so it's inevitable. Now let's talk about all of the possible outcomes. I'm going to break down every way that this could go and how this affects the stock market. Scenario 1, tariffs are reinstated. In the short term, the market would dip. You'd have value stocks that would outperform the market, such as Berkshire Hathaway, Exxon, United Health Group, and others. Those companies would outperform the market. But this would also be a great time to buy ETFs that are discounted. I would expect BUG, big growth ETFs, as well as QQQ and others that are similar to those. Now you have scenario 2, no tariffs at all. In this case, the market would rally on this good news because they would be relieved. You'd also think of tech and retail. These are sectors that could definitely bounce due to the good news. And lastly, think of ETFs like QQQ and BUG or any other consumer ETFs that could benefit from this great news. Now you have scenario 3, modified tariffs and delayed action. Honestly, this could have a mixed reaction in the stock market all the way down to volatility. I would expect that the market would be trading sideways. And in this instance, it would probably be safer to go ahead and hedge against all of this by investing in assets such as gold or utility stocks, maybe energy companies, things of that nature. Now, I must say, I am not a financial advisor. Everything in these videos are for entertainment and educational purposes only. If you are wanting to invest in the stock market, please do your own due diligence and consult a legal professional before investing any money into the stock market. You may, and in fact, you will at some point lose money. Now, what you should be doing right now. Now, here's how I would handle this as a long-term investor. Number 1, I would never panic. Most people try to time their investments by headlines, whether it's positive news or negative news, but it usually never works out in their favor. If you're a long-term investor, that means that you have a game plan. And at this moment in time, this is where you need to stick to it 100%. Make sure that you have your diversified portfolio. Make sure that you're investing in the ETFs, dividends, you have hedges against that, so maybe gold or silver, you have utility companies, whatever it is that you need to do to make sure that you're playing it safe. Remember, the point of having a diversified portfolio is to make sure that you can hedge yourself against any and all effects of the market. If one asset is winning, that has to mean that another asset is losing. But if you're invested into multiple assets, that means that you will be able to wither out the storm. Number 2, I'd have a watch list ready. If the tariffs hit and the stock market dips, what are you going to try to scoop up at a discount? Remember, as a long-term investor, you are going to take advantage of the negative news. When others are fearful, you are greedy. That's words by Warren Buffett, who is one of the greatest investors to ever live. Are you watching QQQ? Are you watching BUG? Are you watching SCHD or other dividend ETFs? You have to make sure that you have a watch list ready, and when these stocks or ETFs or REITs hit their price target that you would like to invest in, we'll take advantage. Now, lastly, I would diversify and I'd automate. You never want to have your money all in one sector, because if that sector does bad, well, clearly your portfolio gets massacred. You want to make sure that you're just dollar cost averaging into whatever ETFs or stocks that you feel like are valuable. I want to say this. Make sure that you use these circumstances as opportunities to study. You want to make sure that as a long-term investor, when things like this happen again or more negative news hits the market, you are well prepared and equipped to handle the fearfulness that others will be implementing, whether it's on social media, whether it's in the news outlets, or whether it's at work and you're just hearing gossip sessions. You are a fundamental investor that is sticking to your plan, and you have studied the market, especially during down times, and you know how to weather the storm. Look, whether tariffs come back or not, there is one thing that is guaranteed. The markets will react. Now, you can either be someone who is completely panicked, or you can be someone that's completely prepared. Let me know in the comments, do you think that the tariffs are coming back? And if so, how do you think the market will react? Also, make sure you subscribe. I'll be breaking down the actual announcement and the market reaction later on this week. And as always, I'm your host, Marcus. You are here on Zero to Wealth, and I will see you on the next episode. Peace.